hitting the tape, and we are seeing things move into the green. Sam, third quarter adjusted EPS coming in at 82 cents. Estimates calling for 76 cents. Revenue coming in at $742 million. Estimates calling for 730.5. So a beat on both the top and bottom line. As far as their forecast for this fourth current quarter, EPS 84 to 85 cents. Estimates calling for 84. EPS for the fiscal year coming in between 343 and 344. They originally had that as 333 to 338, so an increase on their fiscal year EPS. For revenue in the fourth quarter, they're estimating now 748 to 750 million. Estimates were calling for 738.6, so a significant uptick from that estimate. Fiscal year revenue expected to come in now 2.91 billion, and they saw that as being 2.88 to 2.89. So upward revisions across the board in terms of their current and fiscal year EPS and revenue numbers, and a beat on the top and the bottom line as they're coming across the wire. KG, we're oscillating a bit right around the unchanged line. We were about 2% positive when I looked down last time. Now we're pretty much unchanged. As you're digesting these numbers as well, what are some of your takeaways just right from the outset?
I mean, you'd like to see the guidance numbers, especially on the full year basis, both beating, top bottom line here. It also looks like margins are are intact at this point in time here. The remaining performance obligations, I think, are a little bit mixed. So if you're looking at the ARPU number, the headline number, 17% growth on a year-over-year basis. Current remaining performance obligations grew at 13%. I believe that's actually a little bit of a deceleration, which is why the market might be maybe questioning or gyrating right now post this earnings announcement. You really want to see that backlog of orders continuing to rise to the upside. They are a subscription model company. I believe probably over 80%, 90% of their revenue is based on subscriptions here. So if you are starting to see a little bit of a slowing with that current ARPU number, that could also signify that maybe revenue in the near term could be challenged. Now, their guidance does not signify that, but once again, looking at the underlying metrics, that's probably a question that a lot of investors and traders are looking at right now.
Yeah, I want to give those numbers, too, to our viewers right now. Their RPO coming in at $4.292 billion. That's an increase of 17% year over year. That CRPO that Kevin was just mentioning there, that's their subscription backlog for the next 12 months. That's at $2.328, up 13% compared to the year ago. Expectations were for that to come in around $2.26 billion. So a beat, but not a considerable beat there. Sam, in terms of what you were hearing from what was being most in focus here, or what analysts were looking for, or anyone you spoke to today in terms of Okta and what it would need to see, a positive move to the upside. Right now, still mostly unchanged, kind of oscillating between up and down 2% right now. What were you hearing?
Yeah, well, I was hearing a lot of analysts are talking about how they do see some easing pressures for this company, but they have talked prudently in previous quarters and had said that that would continue throughout the course of the year. So the markets had been sort of questioning prudence. They're having a little bit of a hard time getting their heads around short-term conservatism with these sort of long-term optimistic goals here. But this is sort of what the company has been outlining as far as some of their commentary. So it's going to be interesting to see what they actually say on the call here. But, I mean, this is a big player in the cybersecurity space. I know we're going to be getting across another name very shortly. We've already heard from some others in the space too. But this is in the business of, obviously, the identity and the security software. It does have partners like AWS. So they do, as far as some of the analysts that I've spoken to, or at least heard, as far as the commentary is concerned, want to see, how AI demand is holding up for a company like this. The longer-term growth story as well, because, this is a company that's obviously in the business, as I said, of that identity and security. I mean, you're thinking about the IT budgets here. You're thinking about cybersecurity, the fact that this is not negotiable. It's not optional. The spend is there. I mean, you're thinking about your employees. You're thinking about your suppliers. So I think, that's going to be something that's going to be addressed on the call as to, any of their further customers as well, as far as what they've managed to do in the quarter.
And KG, as far as the focus on the call here for Okta before we jump into Marvell's earnings, what do you think some of the big questions will be?
Their adoption or customer adoptions, especially when you're looking at large customers. I mean, that has been the area of the market where they could obviously expand a little bit more in, where it does become a little bit more challenging because of the competition within the space. And those larger customers are also going to provide better margins for their business as well. So not only the AI adoption that they are seeing, the AI rollouts that they are implementing within their product offerings here, but is that really attracting some of the bigger players within the enterprise space, the S&P 100 companies.
All right, and let's move to Marvell right now. Their earnings just coming in, their third quarter EPS coming in at 76 cents. It's a penny over the expectation there. Revenue coming in at $2.07 billion. That's just slightly above the expectations for $2.06 billion. Now, as we're taking a look here, also making a move about 2% to the downside here on these initial numbers. And some other commentary coming across here. Marvell will be buying Celestial AI. That was something that was rumored to be potentially happening before this report, that there was a possibility they would be picking up an acquisition here. That is now proving to be true. They're going to be purchasing this Celestial AI. And we have seen with the announcement of some of these acquisitions that they are not met oftentimes with the most positive response, down about 2.25%. Also just coming across right now, their EPS expectation for the current quarter here expected to be about 79 cents plus or minus 5 cents. So, the expected consensus was 77 cents. That may be considered a small miss there. We might see some punishment there. And as that number came across, we did dip down to 4% in the negative here. KG, as we're just starting to take in these numbers and also get news of this purchase of the Celestial AI, this acquisition here, what are some of your overall thoughts?
Yeah, I think the acquisition is really not a surprise. I think the dollar amount is probably what's kind of shocking the street here. Anytime that we see any type of acquisition being made, it's hard to evaluate how much the company should spend, and then also coupling that with the earnings announcement, you could have these type of reactions here. When you're looking at the overall gross margins that are expected for the quarter, they're looking between 51.1% and 52.1%. That's going to be GAAP gross margins. For the most part, that's kind of holding steady. I would expect that they probably will see free cash flow getting eaten into over the next couple of quarters with this acquisition, as well as any type of expansion that they are seeing when it comes to the AI space and trying to assist customers, especially large customers, with the ASICs build out here. So not a lot of commentary around those custom chips within this earnings announcement, but high level, once again, the announcement of the acquisition, the dollar amount that's been put to it right now could also impact the stock's reaction post-market, and I think that's exactly what's happening right now.
And interestingly enough, Sam, this acquisition had been rumored before this earnings report. It was estimated to be about a $5 billion deal before they announced the company and the deal itself. But it says they're going to acquire Celestial AI in a roughly $3.25 billion deal. Shares down about 4% right now on the heels of this. Not a significant beat here, and not a whole lot of commentary given, as KG mentioned. As far as the focus of what you think the questions will be on the call and where the focus will lie here when it comes to Marvell, what were you hearing today?
Yeah, well, I mean, you and I even had a really good conversation about this earlier today. And I mean, you even made the point that, for the report to be viewed positively here, I mean, we would need to see continued strong demand, certainly for the networking silicon in the data centers. Are they keeping up the momentum here? So I think obviously that's going to be a big focus. KG touching on, of course, the margin story, that's still holding up. So that's obviously going to be a big focus too. Where is the revenue coming from? The AI versus the legacy chips too. We've got this expansion as far as collaborations with Azure in Europe. So an update on the customer and design wins as well. That will be key to obviously the infrastructure build out. So I think, these are all going to be questions. But I mean, just coming just above expectations here, as we've seen throughout the course of the earnings season, and, what we've been talking about each morning has been, it's perhaps not just good enough to only clear the bar here. It's really how you see things in the future. But I believe CrowdStrike is out, and you're across those numbers as well.
Yes, CrowdStrike just came out, and also a little more detail on that Celestial deal for Marvell. It is expected to close in the first quarter of 26, so a very fast acquisition there. But let's get straight to CrowdStrike here. EPS coming in at 96 cents. That is a beat by 2 cents. Expectations were for 94 cents. Revenue for the third quarter coming in at $1.23 billion. Estimates were calling for 1.21. So a beat, not a considerable beat on the top or the bottom line, but a beat nonetheless. For the fourth quarter, EPS guidance is between $1.09, $1.11. 111, estimates calling for 108, so fully above that range there. Revenue for the fourth quarter, 1.29 billion to 1.3, estimates calling for 1.29, so in line to slightly better than expected. For the full fiscal year, revenue expected to be 4.8 to 4.81 billion. That is an upward increase from the expected 4.75 to 4.8 that they had previously forecast. So we are seeing adjustments to the upside here as we're taking a look at some of the market action here. Just slightly down, less than 1% right now, about 1% down on these numbers as we start to digest them. KG, is this going to be enough for CrowdStrike?
I'm not sure. I mean, obviously they were able to meet the street's expectations, but you're not seeing any type of outsized numbers to the upside here when it comes to this report. And in fact, I would say the margin number, I think the whisper, it actually came in a little bit less here. The problem with this company is obviously they had a major outage. They started paying out a lot of discounts to a lot of their customers that ate into their operating margins or their profitability, if you will. And the expectation is that they're going to start winding that down and pulling those back here a tad bit, which should actually expand margins. It just doesn't seem like you're getting that at this point in time here. Obviously, the top line beat, bottom line beat, those are great, but I'm not seeing anything in this report that's really earth-shattering, to say the least here, which is probably why we are seeing some of the volatility in the stock after hours.
Yeah, and I think expectations were fairly high here given their pretty consistent past performance when it comes to CrowdStrike. They've had some recent acceleration. They are noting they achieved record Q3 net new ARR. That came in at $265 million. That was an acceleration of 73% year over year. Their ending ARR is at $4.92 billion. That's up 23% year over year. Sam, as far as conversations that you had about CrowdStrike today, knowing that they've been a consistent performer, the bar was set pretty high for them to potentially beat or at least meet. They met, but the beat was not significant here.
Yeah, but it's interesting. They're still saying Q3 was one of our best quarters in company history as they did achieve that record ARR, as you just mentioned. But yes, the bar was just so high here. I mean, look how much this stock actually rallied year to date in the lead up to this. I mean, it's up about 50% or so. I mean, this has really been seen as taking pole position here across cybersecurity. I was talking to someone in the space earlier today who said that this company basically is in the right place, the right time. There is so much need for cybersecurity right now as far as the AI demand, what that's creating as far as the necessity, as I mentioned earlier, with the AI budgets, I should say, with the IT budgets and the need for security at the moment. We looked at Palo Alto's earnings report, and that fell off the back of that as far as the shares are concerned. That is because of some of the deals that it announced. But, as far as a competitive edge here, a lot of analysts have been sort of pointing out to me that this provides the end-to-end solutions and basically they counter Palo Alto's one-stop shop with their full suite of services. So I think, some are still very optimistic on this name. I mean, you had a lot of analysts that are talking about how they do expect growth to continue and that they do have a long runway. Just ahead of this, I think it was JP Morgan yesterday talking about how they do expect ARR momentum into fiscal 2027. So I think there's still room to run here because some have been telling me that this is really the top of the list as far as a cybersecurity choice is concerned out there in the market.
And taking a look at the action now, I think a lot of people waiting for the call here, but CrowdStrike is up less than 1% right now after a small beat on the top and bottom line, but their EPS adjustments for the fourth quarter coming in ahead of estimates. Marvell beating on the top and bottom line, but now down about 6.5% on the acknowledgement of that new acquisition, Celestial AI, and Okta down 3.5% on the heels of their earnings. I want to thank Kevin Green for being with us to break down those earnings today.